And the challenge for the society is that we are going to be forced. The government has been forced, of course, to accept the growing lending, but the pace of growth will be then being the decisive factor to the degree of necessary restructuration of our public finances. It's self-evident in our case that the municipalities sectors is going to face dramatic changes, but if the growth rate remains low, it goes also into the heart of the government, public sector. The global strategic issue is, of course, rebalancing the imbalance. And as humbly has to be stated, of course, the dividing line goes clearly within the EMU nations. And as we know, various union member states are in very differing positions. And this makes my reference to the enforcement also to a very serious. I must say personally that having a background of a civil servant and having witnessed the discussions with many member states for decades, when certain representatives of certain countries mentioned already here had smilingly said that it's of course self-evident that we are not going to be able to implement this immediately or in the near future. People have looked elsewhere, some smilingly, some seriously, but for the moment, for the first time, I see the seriousness of the representatives of this country, and of course it is really serious progress. The problem is, of course, that the German and Northern European recovery is not sufficient to solve the European challenge. Now the external, does the help really come from external sources? The situation is, of course, that so far much of the Chinese growth has been based on the Chinese participation in the global economy in the way that we have then exported those activities we have removed to the Chinese market to a very high degree back to the US and particularly European markets. At the moment, we know that the demand remains extremely low, so the expectation is that the Chinese domestic market will do the job. I think it is important to note that that is an issue which is far more complicated than publicly and generally discussed. The Chinese society will be facing very complex challenges, and it's not yet ready to solve the issue for the rest of the world. China can't absorb fast Western reversal. And together, of course, with the challenges I have been reflecting upon the US market, this makes this situation relatively challenging from the point of view of an international investor. It's quite clear, it seems, that the US economy is facing deeper challenges than in many, many previous situations. As you have noted, the labor market outlook coming out from this recession is far worse, far deeper, problematic from the employment point of view. And as noted, there are these external impacts. On the other hand, the vitalization packages and the fact that there is this impact of the private sector now filling their inventories, which has led to these positive figures, particularly in Finland, but I believe that it's to a very large extent the explanation also to the German good figures. And it's not in the longer run sustainable without real market growing demand. And in Europe, we are aware of the growing imbalances, but also the directions of the economies in certain European Union member states are, of course, very varying. So, ladies and gentlemen, what are the implications for institutional investors in this? And now I refer to the sovereign debt. We are experiencing record low short-term and long-term yields. And these yields are not sufficiently high for the pension investors. Valuation of liabilities, reference was made to that. Increased value of liabilities cause reduced solvency in many countries. The interesting issue, and I'm not really indicating, I'm just putting the question. We know that regulation as such tends to have an impact on growth, which is, of course, problematic. But I think it's the case in all the Nordic countries. We have risk-free instruments, and that is, of course, government bonds, because by definition there is no risk in government bonds. And it's very interesting that we have this wave of regulation, but so far I have not seen any signs yet that the regulation would start openly to reconsider the question of credit risks in government bonds. But it doesn't really release us from the responsibility of covering in our considerations these risks. Hopefully there will be progress in this field also. And this, of course, leads us into a situation where the pension investors among the institutional investors are really crucial element of the functioning of our national and Nordic capital markets, where liquidity is a growing challenge. And this leads, of course, into a situation that is this what the expectation in our economy is to a very large extent, even still today, is that we will be the buy and hold players in our domestic markets. Can we afford that? Should we become traders, all of us? And as I believe, we should really also start considering the credit risks involved in sovereign debt. Thank you very much.